The Naira continued its fall at the official foreign exchange market, dropping by as much as 1 Naira at the investors and exporters window and 44 kobo at the NAFEX market. Bosun Obembe, an FX and derivatives trader at Access Bank, joins me now to discuss the activities in Nigeria's forex and fixed income markets. Thank you so much, Bosun, for your time. First of all, we have to talk about why the Naira is weakening in the official market at the time that oil is closer to $80 a barrel. One would expect generally that that should be providing strength for the Naira.
Okay, thank you for having me. So just like you know that the investor and exporters window is driven by the market forces. So if you look at the day before, we saw Naira trading at 414, but yesterday it closed at 415. So it's been moving. It's not something static. So, and the movement is something that is not peculiar to Nigeria. Each currency move based on demand and supply. And like you rightly said, the reserve has grown to whole high of about 9 months, about 40, closing to 40 billion. And we've seen the proceeds of the Eurobond company. So that takes all the CBN capacity to actually intervene in the market and to defend the Naira. So the movement by 1 Naira is not something unusual. It's just driven by the market forces.
The central bank obviously has had a few weeks to, if you like, celebrate the inflows relating to the Eurobond issue and, of course, some other fundraise that we've seen by the government. But the question I would like to ask you now is when we can anticipate perhaps significantly more supply of Forex to deal with the backlog that many traders speak of in terms of demand. Do you see this coming anytime soon?
I think if you look at CBN has actually continued to intervene in the market. Even the backlogs of the FX, I think what we have left is less than about 1 billion. Every week, CBN has been sending at least about $50 million to clear foreign portfolio FPI. And occasionally there has been intervention to clear some local high need demand. While for the retail spot, CBN has been intervening bi-weekly. The only thing we've not seen is, okay, the usual inflows that we used to get from the foreign portfolio investors, we've not been seeing that largely because of the level at which we have our yield. And because the rate is quite unattractive when you look at the inflation rate, which is currently at 16.63, so it's more like a negative return when you compare with the yield. So by the time we start seeing the foreign investor coming into the market, I think that's when we will see the rate will find its level. So this current level, it's most likely go up. But okay.
Do you anticipate that we'll see that inflow from foreign investors? And if so, how much higher do you think yields have to go to attract that flow?
I think we will see the inflow from the foreign investors, but how soon, probably we'll be looking at the first quarter of next year. By the time we see the OMO rate at least maybe going to about 12 to 13%, so we might see this foreign portfolio investor coming back. And thankfully, you look at our inflation rate has been coming down from the 18%, currently at 16%. So by the next time we see maybe the inflation rate coming out, if it comes lower then, and you look at the real return, if it's positive or at least is something that the foreign investors are comfortable with, you will see them coming back. If you look at the foreign, the corporate like Access Bank, Fidelity Bank, even Nigeria went to the international debt market to raise funds, and the subscription level was quite high. So that tells you the confidence the foreign investors they see have in our market. So I believe they will still come back when the rate is at their own risk appetite level.
All right, and let's take a look now at the issuance calendar, especially for bonds. How do you see things playing out, given what we know about the deficit for this year and the plan in terms of deficit borrowing to fund the deficit going into next year?
So in terms of the bond calendar, if you look on Wednesday, there was a bond auction, the rate at which the DMO borrows domestically is you can actually predict it's been like 150 billion at each auction. So at the last auction on Wednesday, about 192 billion was sold compared to the 277 billion that was sold the previous month. So I believe the DMO actually looking to actually diversify the borrowing base to maybe more of the foreign than the local, and there's so many ways in which they can actually borrow at a very low rate. So for me, I think the DMO will continue to actually raise funds, at least looking at 150 billion monthly, and the rate will still be at this 13% level at which the last 50-year bond closed.